Joining us now to discuss the crypto markets is Anthony Georgiades. He's Innovating Capital General Partner. Welcome, Anthony.
Great to be here, as always.
Glad to see you again. So, of course, in the markets right now, the largest centralized exchange, Binance, suspended spot trading, I guess to fix some sort of bug or something, so they say. I'm sure, totally okay. Any thoughts on that? I mean, like, is this? I don't know. I'll let you.
Cause for concern.
Yeah, I didn't want to say those words, but yeah, should people be like nervous here? I don't want to scare people.
With the backdrop of everything, I think it's only natural to have a little bit of fear here, just with respect to kind of the sensitivity just around centralized entities. If you look at FDIC insured depositors in the U.S. or centralized exchanges offshore. Still too early to say what's going on at Binance, but I have no doubt that they'll get it resolved in due time. But it's not surprising whatsoever to see a little bit of fear in the crypto market, given the fact that, as you mentioned, this is the largest centralized exchange in the ecosystem.
Well, Bitcoin and Ether are up right now in any event. It seems like Bitcoin doesn't care. So what's going on with the crypto markets?
It's been fascinating, really, what's been happening over the last couple of weeks. There's always been this sort of conflicting narrative with Bitcoin. It's really been established to be really this sort of digital commodity, potentially inflation hedge, right? And let's be frank, right? It's existed since 2009 at the onset of really this massive wave of monetary policy and easing. So it's no surprise that it's really behaved as a highly correlated technological asset, being highly correlated to the NASDAQ, equities, etc. I think what we're actually seeing right now for the first time is really a shift and a kind of catalyst into that narrative of Bitcoin really actually being a true inflation hedge. There's a ton of uncertainty with respect to the Fed's ability to actually steer monetary policy at the moment. Let's be frank, right? They've really kind of created this existing problem, monetary and fiscal policy that has spurred inflation. Now we're trying to tighten to get out of inflation, and that's actually now breaking and destabilizing part of the banking system. So I think a lot of that fear with respect to both the inability to both control inflation as well as the potential devaluation of the dollar itself is really driving a lot of institutions, retail consumer investors into Bitcoin. I mean, for the first time ever, I'm getting calls from investors, not just asking me how to buy Bitcoin, but how to get Bitcoin into cold storage, which is an amazing phenomenon.
Do we know what's happening on the institutional front? There was so much talk, like in 2021, all the big institutions coming in, and I've been getting a lot of questions about this recently too. Like, what's going on out there? I mean, did you have any sense of what's happening with institutions? Are more of them coming in? Are they sticking around? I don't hear about them that much these days.
Yeah, I mean, look, it's fascinating to see what's been going on, and I think, if anything, actually, a lot of institutions have TradFi has kind of really taken advantage of the scenario with, the collapse of FTX and, some of the uncertainty with a lot of crypto-based exchanges to really make an entrance into the industry, whether it's establishing their own custodial services, whether it's jumping in on the market making side. And so we actually are really seeing a ton of institutional interest and movement, for the first time that's kind of taking hold in grip of the market. And, to be fair, institutions have client interest. There's a tremendous amount of client interest to get into the digital asset space. I think the really kind of one, needle in the hip here a little bit is effectively as it pertains to some of the regulatory uncertainty that we're continuing to see. Just yesterday, right, we're seeing another incident of regulation by enforcement, the SEC going after Coinbase with really just no clarity in terms of, we're going to come down and give you a Wells notice. We're going to enforce effectively against you guys with really no kind of clarity in terms of what it is that they should or shouldn't have done. So I think until we really do get to that level of regulatory certainty, where we don't have FinCEN, the SEC, the CFTC with conflicting kind of interests and policies in place, it's going to be a little bit of slow institutional adoption.
All right. Anthony, thank you so much for joining us. That was Anthony Georgiades, Innovating Capital General Partner.